Norges Bank, the Norwegian central bank, announced last week that they were raising interest rates 1/4 of a point. Usually the Norwegian bank is not like a big deal, but this was at the top of the Financial Times over the weekend. 4 emerging economy central banks, Pakistan, Hungary, Paraguay, and Brazil, along with Norway, have raised their interest rates. And the U.S. Fed and the Bank of England have both said, yeah, we're thinking about doing the same thing. What does this mean for us? What are these grand cycles of interest rates going up and down? And what do they have to do with our average everyday lives? Professor Richard Wolff is on the line with us, the economist, co-founder of democracyatwork.info, the author of numerous books, his most recent, also available as an ebook, The Sickness is the System, When Capitalism Fails to Save Us from Pandemics or Itself, democracyatwork.info, rdwolf with 2fs.com, and Prof. Wolff over on Twitter. Professor Wolff, welcome back. What do you think? What is this? What's the deal here? What's going on with this?
Well, you know, capitalism is a roller coaster. And now that it's in its old age, the roller coaster is getting even wobblier than it was before. Here's what I mean. We crashed 3 times in this new century. The dot-com crash in 2000, the subprime mortgage crash in 2008, and the so-called COVID crash that we're still living in. In each case, the Federal Reserve in this country, which is our central bank, did what every other central bank in the world did, try to keep the damage from overwhelming the economy by pouring wild amounts of money, fresh, new, minted money into the economy, stimulating spending every which way they could think of to prevent the economy from crashing. And no more so than in this last one, which is also the worst one of this century. Now there's a problem, which people have been talking about. If you keep pumping up the money, but you don't increase correspondingly the output of goods and services, and that's exactly what's happened, much more increase in money than increase in output, you run a risk. We haven't had to face the risk for the last 10 years or so, but that doesn't mean the risk isn't there. And the risk is simply that all that extra money will begin to chase a not so much increased quantity of goods and services, thereby producing what we call an inflation, a general rise in prices. Now, it didn't happen for a while for all kinds of reasons we could discuss, but starting last year, it began to happen, and it has been happening ever since. Prices of many things in the world are up 10, 20%, particularly food around the world, which immediately impacts people, and it's beginning to frighten the governments around the world because just as the collapse into a recession and depression threatened capitalism in earlier years of this century, an inflation that wipes out the spending power of millions of employees around the world is also a threat to capitalism. So now they want to slow down the rise in prices, and the way they've chosen to do that is by raising interest rates, because that makes people less willing to borrow, therefore less willing to spend or less able to, and the hope is that by people spending less, it will persuade companies not to raise prices since they're already facing a diminution or a decline in what people can afford to buy. So it's a wobbly system provoking a wobbly government response, and you should think of the economy as being knocked back and forth like a pendulum in a system that doesn't work real well and is now putting us first on one extreme and now on the other.
How do you think this is going to play out? Are you expecting increases, substantial increases in inflation? Or on the other hand, I mean, the other danger here is the Fed overplays their hand, raises interest rates too far, too fast, and crashes the economy again, throws us into a recession.
Right. You know, for the last 20 years, the fear has been that the Fed wouldn't step in with enough to prevent us from collapsing. Now the fear is they intervene so much that now it may wobble the other way. My sense is I don't have confidence in the Federal Reserve. They didn't see these three crashes coming. They didn't prepare us as a nation. They throw huge amounts of money in, hoping with crossed fingers that it all works out. I have no confidence and no reason to have confidence that they're going to be able to stop the inflation in the first place, since it has many causes, not just the quantity of money, and what the Fed can do is always limited. So I'm not so clear that they can slow or stop the inflation, and at the same time, I'm not clear that they won't overplay their hand. They themselves are now in a debate as to whether they overdid it with pumping money in, whether there weren't other ways they could have and should have dealt with the tendency towards a depression that we've just gone through. So I think what you're seeing is an unstable economy being managed by people who hope that what they do will make some difference, but that's all there is some hope, no guarantee, and the pretense that you see from them about how we have it all under control. I mean, if we had it under control, I wouldn't be telling you about three major crashes in the early 20 years of this new century, because that wasn't what was anybody's desire. That was something that this system did to itself.
Right, right. Speaking of the system, I published a piece on Monday, and I know we shared it with you, about how basically, you know, all the media is referring to Angela Merkel, who's just, you know, stepped down after 16 years of running Germany, as a conservative. And you know, I could build a case that she is, at least in terms of monetary policy. Germany has a surplus in terms of embracing neoliberalism in many ways. But you know, in terms of American political discourse, we've got a political party, or political party. I mean, I guess the point of it is all these countries have health care, free education, you know, multiple weeks of paid vacations, paid employee sick days, just this, you know, free paid pre-K. I mean, this is the stuff that, you know, some of it is the stuff that is Joe Biden's Build Back Better plan. And it's being characterized in America as wild, lefty, socialism, Bernie Sanders stuff. And it's been law in Germany for 40 years. I mean, your thoughts on how we label these things?
It's an amazing thing. All my life, I've been a professor of economics all my adult life. I give lectures. I talk about what Europe's social programs are. And my students, for the last 40 years, their mouths drop open. They can't quite believe it when I go through it and explain to them that in Germany, for example, tuition and fees at all universities are zero. There are no tuition and fees. Higher education in Germany is free. By the way, not just for German citizens, for everyone. Yes, they have 5 weeks of paid vacation. Yes, on top of that, they have a dozen paid holidays. Yes, everybody gets medical care insurance from the day they're born to the day they die. Whether they're employed or not makes no difference. It's a right that you get. For those that are interested, abortion by this German conservative, so-called, is basically available to everybody at no cost, provided by the government, et cetera, et cetera, et cetera. So by American standards, Angela Merkel would be, you're right, a Bernie Sanders or further to the left than that. And here's the irony about the elections over the last weekend, and I think it's very important that Americans learn this. Not only was she pushed out, Angela Merkel, but she was pushed out by people that are to her left in Germany. SPD is the Socialist Party of the German word for Germany is Deutschland. So SPD is the Socialist Party of Germany that beat her in this election. But even more important than that, Tom, is the referendum that passed 56% to 39% in the city of Berlin, the capital. Here's what that referendum was for: that the government of Berlin would nationalize all apartments in Germany that are owned by landlords who have more than 1,000 apartments. This covers about 250,000 apartments, 240,000 to be correct, in Berlin, that will now be purchased by the city in order to provide get ready now, low-rent, affordable housing so that the city of Berlin doesn't get gentrified to be out of reach of the vast majority of the German citizens. It's a non-binding referendum in the sense that now there has to be negotiation about how to implement, but the 56 to 39% is a much larger percentage than voted for the new government. So the mass of the people voted in a massive show. They want public housing. They don't want private housing. They want affordable rents. And they are going to use what we call in America the law of eminent domain, the right for the community to take property when it's in the social interest of the community as a whole. It's an amazing achievement in Berlin and deserves the publicity it has not got.